And, whether or not Besson is able to keep a lid on the deficit, right, I think is going to be worth watching, because if he is not able to, right, that potentially could be inflationary and mean higher rates and higher yields, no?
Well, the fiscal deficit remains the elephant in the room, right? Yeah. I think that's really key, where it needs to be a balance in between. At the moment, we are still not sure yet in which direction it will go. There's still no willingness to, especially from the politicians, to do the cuts. That's also why there's for sure a strong voice needed from Scott Bessent to bring the story on track, but it's still too early to have a view on there. But overall, we don't see a resolution in 2025 on the fiscal deficit side.
So we had an earlier guest this morning telling us that, look, markets may be able to have their cake and eat it at the same time, in the sense that he's calling for 75 basis points worth of cuts, more cuts from the Fed. That is one in 18 hours time, and then another two early next year. And the ability for the 10-year to go up to 5, that roughly 150 basis point differential, he says, is fine. It's tolerable for markets. Are you confident that we are going to be able to get both the Fed continuing to cut by, let's say, 75 basis points, even if the 10 goes up to 5?
Well, we probably have to look at the short end, which is pretty much well anchored. So basically our view is we see the cut tomorrow, we have another 3 cuts by next year. The long end might still rise a bit, but what's important for sure, there will be sectors also suffering if you really go up to 5%. So there, growth stocks, highly leveraged stocks, they will be feeling the pain as rates will stay longer. That's also where you will foresee for sure a divergence in markets. And that's also why we expect the volatility to go higher next year. And also, if you look at performance, we had two tremendous years in the U.S. markets, more than 20% performance. Also there, we expect a lower range of outcomes on the performance side with higher volatility going in.
Interesting. Okay, that's kind of contrary, right? More challenging 2025 then against what most people have been talking about. Man's coming on this.
Yeah, absolutely. Hi, Thomas. It was really interesting the way, and rather ironic, that despite the Fed having now been, cutting a few times, that the US dollar has been so resilient, and I guess it's buoyant on things like the idea of US exceptionalism and economic continued strength, etc., etc. At some stage, though, do you think we need a little bit of a correction in the US dollar?
Well, if you look at the US dollar, what we see short term, it's really kind of it's already overvalued. It still has a bit more room to run, but we would probably more use it to sell on strength, because in the medium term, we expect also that the US is going to slow down, and that's also where we expect a lower dollar by year end next year.
What will that mean for gold then?
For gold, we are still positive, so we keep it in our portfolios. Also there, basically, the rate cuts, we still believe they are in place. Also there, with lower yields, that's still beneficial for the gold price. And at the same time, de-dollarization is going to continue. And if you look at the ETF flows are still 20% below compared to the history. Also there, we still have more room for retail investors going into the ETFs to build up exposure in gold.
2,800, 2,900 gold, realistic?
That's realistic for sure by year end next year. So we would even see higher up to 3K, which is our case on the gold side. So
3,000, is that right?
That's kind of the top which we have in place.
I'm curious, what about silver?
Silver, we don't have a specific price target around it, but what we are seeing, we also focus more on industrial metals. So basically, we also added as a diversifier industrial metals in our portfolio, more the energy transition metals, because it's also kind of a hedge against geopolitics, inflation as well. So basically, that's also where we are a strong believer in adding alternatives with industrial metals into the portfolio from 2025 on.